Okay, good morning and good afternoon, everybody. Again, my name is Nathan Dean, and I am a senior policy analyst at the Bloomberg Intelligence Bureau of Washington, D.C. Well, actually, it's not the BI Bureau, that's mostly Bloomberg News back there. But anyway, what we wanted to do today is just talk about what is happening in Washington and what you're going to see in the headlines, and that's predominantly the government shutdown threat. I mean, if you've seen the news over the weekend, you've seen the scary headlines that come Friday, we may have a partial government shutdown. I call it partial because in this instance, 4 out of the 12 appropriation bills will shut down on Friday night. The other 8 go on March 8th. So what could shut down this week? Well, it's departments like agriculture, energy, veteran affairs, which is mostly mandatory spending anyway, but it's a lot of the smaller agencies that don't really bring that political impetus, if you will, to bring policymakers together. Now, in terms of impacts, I've said this before and I'll say it again, scary headlines with the shutdown does not equate to scared markets. Even if we were to have a shutdown, I don't think the markets would react all that much. And that includes defense contractor stocks, just because the way these projects are usually funded, they usually have an 18-month, 2-year lead time, if you will. And if we have a shutdown of 1 week or 2 weeks, honestly, there's not going to be all that much. For smaller contractors, obviously those people who get furloughed, government employees who get furloughed, obviously most of the I think nearly all the time Congress reinstitutes their pay. It's those smaller contractors that unfortunately bear the brunt of shutdowns. But in this case, we could potentially see a small shutdown, but I don't think the chances of anything long term are that high. The reason being is that Speaker Johnson, and this is all up to Speaker Johnson. The Senate will send him a deal, essentially kicking the can down the road, because that's what Congress is great at. They like to kick the can down the road. But Speaker Johnson is in a position where he has to decide: will I allow some of the hardliners to continue to push for shutdowns and sequesters and so forth, or am I going to make a deal to try and kick the can down the road? And then in this scenario, I could see him saying, why don't we have a 1 or 2 day shutdown through the weekend and try and come up with something early next week. But ultimately, I do think they are going to kick the can down the road. April 30th is actually the more important date to keep in mind. April 30th is when, if the United States is operating under a continuing resolution, we have a 1% sequester. And that would be a 1% cut across the board, and it wouldn't just apply to any agency, it would apply to them all, including the Department of Defense, and nobody in Washington wants that. And so don't be surprised if they say, hey, instead of March 1st and March 8th, let's kick the can to April, and that's when the serious negotiations take place. If we do have a partial shutdown next week, though, I will state that if you're in the commodity trading space, just be a little careful. Some of the ag reports that you may use will be delayed, but everything else will go through the March 8th timeframe. So if you think of like BLS reports and data that the Federal Reserve uses and so forth. So that would be on the March 8th deadline. The March 1st is primarily agriculture and so forth. So, the House doesn't come back until Wednesday. There is a meeting at the White House tomorrow with Speaker Johnson, Senator Schumer, Senator McConnell, Representative Jeffries, and so forth like that. So we may get a little bit more color on this, but it's not something that we at BI are terribly getting all that excited about. Other things that are going on this week, well, we are talking quite a bit about the Capital One Discover financial merger. So this was an announcement from last week that Capital One is going to buy Discover Financial. And so my colleague Ben Elliott, who ironically sits right here, has been doing a lot of work in terms of how Capital One's purchase of Discover, or their potential purchase of Discover, will make them look more like Amex, not as a true competitor to Visa and MasterCard. However, on the policy space, my colleague Jennifer Rhee and I put out a piece today talking about how I'm cautiously optimistic that the Capital One Discover Financial merger can pass the Fed and the OCC, but Jen's take is that they may have a much more difficult path when it comes to the Department of Justice and the antitrust measures. So, whenever there's a bank merger, obviously there's two sides of this coin. It's the antitrust side, and then you have the regulatory side. So if you have antitrust questions, please let me know, and I'll put you in touch with Jen, and she can talk to you about that. But on the regulatory side, I would just call out that, this isn't really a true merger of banks, like if you were to say one bank purchases another bank. Capital One obviously is a bank purchasing a credit card issuer. They'll become the biggest credit card issuer in the nation, but they're also purchasing the Discover network that goes along with this. And this has a couple of policy impacts. So first, the combined entity of this group would be around $660 billion in assets, which puts it on par with U.S. banks. So it's not a globally systemically important bank. This is important because the OCC in particular, if a bank were to become a GSIB, they even say in their principles this would be this would raise a red flag. So, but it doesn't. So that's one of the hurdles that they can get through. Secondly, the OCC and the Fed are going to look at the community reinvestment numbers and community impacts. Now, a lot of this is behind the scenes when it comes to like what the CRA number and so forth. And what I'm talking about here is essentially each bank is ranked on how they actually conduct loan operations, products, and services to communities. And the OCC under the Biden era has taken a much more heavy interest in determining how many branches are going to be closed, what communities are going to be impacted here. Now, Discover doesn't have branches, like another bank would. So again, this is something that's a little bit different, could bode well, but a lot of this is behind scenes. Now, the third thing is that remember I said Capital One is going to purchase the Discover network. This puts it on par with Visa and MasterCard in terms of being able to offer services to merchants. And there's actually an underlying impact here on the Credit Card Competition Act. So this is a bill from Senator Durbin that would, if he were to get his way, require banks to offer their merchants not just a Visa network, but a Visa plus another network, or a MasterCard and another network. And the way a bill is actually written, you can't have Visa and MasterCard. It would have to be Visa plus one other, or MasterCard plus one other. So Senator Durbin has been pushing this bill. If Capital One were to purchase the Discover network, and if Capital One were to say that we want to increase card usage on the Discover network, and from Ben's analysis, it sounds like that it would only be debit cards only at this point, plus Discover's already existing credit card portfolio. So that's a big if Capital One decides to increase the usage of the Discover network. That could potentially negate some of Senator Durbin's concerns that there's no competition in this place. Because prior to this merger, Senator Durbin had been on the warpath and actually getting some bipartisan support on this, that the Visa MasterCard duopoly network should be actually, the bill isn't designed to destroy it, but the bill is designed to bring more competition and therefore lower fees. And in fact, there's an April 9th hearing that Senator Durbin has scheduled with both Visa and MasterCard, but also United Airlines and American Airlines, because the airlines have come out and said that if this bill were to go ahead, rewards programs would be at risk and people wouldn't be able to use their United cards or American Airlines cards and so forth like that. So where I'm going with this in terms of the Capital One Discover merger, if you will, is that we're cautiously optimistic that it can pass. The DOJ antitrust issue is a little bit different. I'm going to defer people to Jen on that. But ultimately, this credit card competition bill could also be delayed or pushed off, or, we didn't have a high chance of success anyway for this, but it's just another thorn in that bill's side. So moving on from Capital One to Discover, let's just talk about the SEC climate change rule. Now, there's a lot of rumors going around Washington at the moment that the SEC is going to release their climate change rule potentially as soon as March 6th. The reason being is the SEC likes to issue their final rules on Wednesdays, and you have to give 7 days notice. So on Wednesday, don't be surprised if you get one of those SEC emails that says, and it doesn't even say we're going to hold a meeting. It just says SEC, events update. But if you click on it, or honestly just ask me, we may say that we have an SEC climate change rule set to be released on March 6th. So the big question is, will Scope 3 be in there? So this rule will require all 6,900 public filers in the United States to disclose Scope 1 emissions, Scope 2 emissions, and Scope 3. Scope 3 being the supply chain. Scope 1 and Scope 2 directly tied to the company. Scope 3 is, again, the supply chain. Now, Bloomberg Law is reporting over the weekend that Scope 3 is out. And this is actually somewhat controversial either way if it was going to be included or not, because the other Democratic commissioners, pressured by Senator Elizabeth Warren, had been pushing for Scope 3 to be included. Now, it looks like Chairman Gensler has decided to take the approach that we're going to pull Scope 3 out. It sounds like there's some also changes related to Scope 1 and Scope 2 in there. I can send you the Bloomberg Law piece if you are any interested in this, but this proposal will come out probably in the next week or so. Obviously, if we have a government shutdown and the SEC is impacted, they're not going to be able to operate while, if this goes into March and so forth and we're shut down. But the SEC sounds like they're going to put out this rule without Scope 3, with some additional changes to Scope 1 and Scope 2. And as my colleagues Elliot Stein will tell you, it's almost certain that it's going to get sued, and it's almost certain it's going to be litigated. And as of right now, Elliot's take is that the SEC may have a really tough time keeping this rule once it becomes final. So stay tuned on that. The last thing I want to talk about before I send you back on your day is something a little bit more fun. The national pandas could be coming back. There were reports over the weekend that the National Zoo is in talks to get pandas again, since the San Diego Zoo seems to have gotten 2 pandas from China. So I'd just like to include that because I think pretty much every elementary school kid around the area really wants those pandas back. But if there are any questions that you have, please feel free to reach out. I'm going to leave it there, try and keep it to around 10 minutes. Thank you very much for your time, and we'll talk soon.